there is out there. With that, one of the things that we focus on is how to teach our producers to really be insurance advisors. We want to move away from price and make it about price, because if you live by price, you die on price. And there's really not a lot of loyalty when you have customers, when it's all about just getting the cheapest bid for their insurance programs. We have found a lot of success by using our sales process we call our roadmap series to help our producers really develop a different buying experience for their customers. And so today, what I would like to do is present to you just a high-level overview of what that process looks like and how you can change the game for your customers and for your relationships and win more business. Within this presentation day, I've got some embedded videos that we will be sharing along the way with one of our producers who has had a lot of success using this method of selling. So with that, I would like to start with this sales statistics slide, just to give us a little framework around why it's so important to do it different. Only 3 to 13% of people will change brokers every year. Now, why is that? Why is that? You know, that's a pretty small number of people who are actually out shopping insurance. Well, if you just look at your current book of business and you look at your own retention of that book, you know, a lot of people will have from 86% to 7% retention of their book, which means very few people are out there actually proactively are seeking a new change for their insurance program. And so because of that, we have to really step up our game to find the people that aren't actively looking, to motivate them and to educate them that there is a better way to buy insurance. You know, the reason they don't change is because of the perceived chaos that they have to go through to actually change brokers. You know, they have to fire you or fire their broker to hire you. And is there enough premium on that account to make it worth their while to go through it? There's all these documents and applications and information that they have to go through just to make that change. So what I want to present today is how can you change that? How can you really entice people to know there is a better way and really help educate them on and put them in control of their insurance program? Well, there's a few statistics here that I think is really important to be very mindful of. First one says 48% of salespeople never follow up with a prospect. 25% make a second contact and stop. 12% make 3 contacts and stop. 10% make more than 3. So, you know, here's a disconnect here. I've worked with hundreds and hundreds of producers over the years. I know what works well, and I know what that can work against a producer. One of the things that we identified very quickly early on with our producer relationships is you have got to remember this is a relationship business, and you're going to have to stay in contact with people and make sure you are top of mind when they think insurance. So that nurturing is so important, that you pick the right people that you want to do business with, and then you show up. And it shows the next section of this is 2% of sales are made on the first contact, 3% on the second, 5% on the third, and 10% are made on the fourth contact. Here's where the rubber meets the road. Over here to the far right, 80% of sales are made from the 5th to 12th touch or contact, from that initial meeting to a sale. And so what are you doing? What is your team doing that really elevates that relationship piece to over time win the business? We know this is not a one and done type of approach. We're not in that industry. We have to go out and we really have to nurture these relationships. So what do we do to make it different? Well, I want to start out with a video to introduce our roadmap series and what that is about, to give you just to tee up where we go next with this.
In using the roadmap, I have found that it's been a big change, not only for me as a sales producer, as a sales guy, but also for my clients and for the insureds or the prospective insureds that I'm meeting with. Initially coming into the business and coming into the insurance industry, it was all about just quote, 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 just try to get in front of these decision makers and just turn a quote and hopefully be lowest dollar or cheapest option. Now the process is completely different. I've essentially done a 180, and a couple of good things have come from that. Number one is it helps me weed out the folks who are, just trying to take advantage of me or just trying to commoditize me, I guess I should say, for a number. So that's the first thing that I like, is I can get to a no or a yes quicker. And then secondly is it really makes you stand out as a professional advisor, someone who looks the part and talks the part, and just going through the process and helping educate these folks has been quite enlightening for me, actually, and I've enjoyed selling this way.
Oops, sorry about that. So what is this process he's talking about? Again, as I mentioned earlier, this is just a very high level, how to do it different and how to take people through a different buying experience. We start out with creative prospecting. Your messaging is critical. What are you saying to set the stage for the rest of that buying experience for your customer? We'll go through just a high level. What is an initial meeting? What does that discovery look like? How do you present your findings? And then how do you close the deal? So let's start with creative prospecting. What is your messaging that you're doing? How do you sound different? I love this script. It's something I think it really sets us apart, and it creates that curiosity that gets folks to really think about, I want to hear more. So after you introduce yourself, you would say to someone, well, the reason I'm calling you today is not to quote your insurance program or even offer you a bid. In fact, we found this approach actually hurts you as a buyer. Okay, first thing out of the gate, you're saying something that nobody else is saying. You're taking that sell off the table. I'm not here to quote your insurance or even offer you a bid. Okay, then why are you calling? Well, and then you make the bold statement of, we know that actually hurts you as a buyer. That creates that curiosity. I'm going to tell you in a moment how to respond to that. They say, well, what do you mean? Why is this going to hurt me? Because they only know one way. And that's how the industry has taught them is, run out there, grab their policies, get their loss runs, and go to the marketplace and try to find the cheapest price. So we'll circle back to that in a second. And then you go into your value proposition here, or your value statement. I'm calling you today because we've helped similar businesses like yours save money and stretch their insurance dollar further by identifying financial levers that they could be pulling in order to make these savings. Would you be open to a 15-minute discussion so I can show you our process? Now, this is really important. We are not leading with products. We're not pitching carriers. We're not pitching price. We're trying to encourage them to step into our process, because it's our process is where we're going to identify the best way for us to identify those financial levers that they could be or should be pulling. And some, if done at the right time, can really impact the outcome of their insurance program. So remember, what is your message? What are you telling them? How are you sounding different? Back to the statement I made about only 3 to 13% of people are going to change insurance brokers this year on their own. Well, one of the things you can do to mix that up is you got to sound different. You have to have different visual aids. You have to have a different process. You want to give them a different experience. And that's what's going to help them motivate them to lean in and say, tell me more. So what does it mean that it's going to hurt me if I get quote our insurance? Well, here's an opportunity for you to educate your customer about how it works behind the insurance curtain. Typically what happens is, I'm sure every one of you have come up against this, where you are talking to a customer and, maybe the conversation went well, and maybe because they just are trying to be polite, they invite you back for, come see me. And it's kind of a little bit of to get you to move on. But out of that, when you're asking questions like, well, how do you, what is your typical buying process? What do you guys do? And you get the feedback, well, you know what, price is important to us. And what we're going to do is we market it to several brokers every year. We give them a chance to come back with the best price. Well, here's a chance for you to say, let me tell you why that's not the best process to get the best return on your investment. And here's a little visual aid to show you what that looks like. We are the only industry in the nation where, or in the world actually, where markets can be blocked. So even though you've been invited to the table to provide a quote, if you go out there and try to quote and several people are also in that same arena with you, this is what happens. You know, first in, and a lot of carriers, they're the ones that are going to get the quote. Even though they received your submission, it's the guy that beat you to the, you know, to the table that's going to get the submission from that carrier. And if there has not been a proper evaluation, and if their story isn't being told in the best light possible, you can see, number one, it muddies the waters and what the underwriters receive. First in gets the deal, you know, gets the opportunity to get the quote. And, you know, you can see agent one who's gone to their different carriers and see the outcomes that come from his efforts. Agent two gets no quote. Agent three gets a final quote here, but, you know, there's just, depending on how they, you know, who got to the table first into the carrier world. The other thing is if we go to quote, if we grab their policies and get their loss runs, the first thing that happens is the carrier lets the incumbent know, hey, your customer just requests their loss runs. That triggers an event for the incumbent to quickly go out and block the markets to protect their investment in that relationship. So who is that incumbent protecting? Are they serving the client, or are they serving their own best interest? And that's really what's taking place. So that's why that's not the approach we're going to take. We're not going to run to the marketplace at this point. We don't even know what they need. We don't even know what they have. We need to take the time to really do a proper evaluation and to look to see if we can identify financial levers that could really impact the bottom line. So that statement we make about we're not offering your bid right now or quoting your insurance is a true statement. That's not how this process works. We really take them through a different buying experience. So the next thing that you want to consider too is when you make the statement is this is what we do, and you know we're trying to find those financial levers. We always say come prepared with a case study or a story. Stories sell. If you can give them an example how you helped another customer by them going through your process and what the outcome was by them taking the time to do it different, that is a very powerful statement to make. So this is just an example of a couple case studies or stories that can be shared. Now, if all you have to do is look at your own success, look at your own accounts, which ones have you really come back and had success with that you can share that story with somebody else? Or maybe your agency had a success. Even with us, if it's at the Leavitt Group Enterprise, there's a lot of success stories out there, but you want these stories to be applicable to the customer you're talking to. So keep that in mind. Don't just throw something at them, but be, you know, align your examples to what may resonate with them. So let's pretend the customer is a work comp. You know, I'm looking at their, or a PNC, I'm looking at their liability policies. And this is an actual scenario. You know, I don't know if you make the statement, I don't know if this would work for you, but I did a class code analysis on a customer's liability policies and found that they were not classified correctly. And it ended up saving them. And then you put the actual dollar amount in there. So you can, you know, share with them, this is from doing part of the process. We found a financial lever here, which was our class code analysis. And this is how it impacted the bottom line. Or another one would be a mod master report on their mod. You know, their mod jumped from a 0.80 to a 1.5. We identified how we could get it down with lowering the premiums too. And then you put the dollar amount in there. Then you make the statement again. I know this doesn't apply to you. We don't know what applies to you. That's why we would love to introduce you to our process. Would you have 15 minutes of your time that you would allow me to come in and share more about what this process is about? And if we can create a case study on you. So it's just that simple. It's you're not offering them a bid. You want to talk to them about financial levers they could be or should be pulling. An example of what one of those levers looks like that you were able to do for another customer, and then you want to secure that 15-minute meeting. So what happens when you have that 15-minute meeting with your customers? Well, here it is. First thing you want to do is you want to have an agenda, just some type of agenda, so it's very clear what you're going to cover in that 15 minutes. But the first thing you want to say to your customer is you want to make two statements. First one is, I asked for 15 minutes of your time and I am not going to break that first promise I made you. So I'm going to be watching my clock at 15 minutes and we're going to have a hard stop here. But however, if you want to continue this conversation, please let me know. But as far as I'm concerned, I'm going to stay true to the what I've told you over the phone. And the second is, this is not about quoting your insurance. You want to, the key here is you want to make sure you're dropping their buyer's resistance. You want them to become open and honest with you. You want them to share with you and feel like you're not going to hijack the rest of their morning or afternoon, because they've had that happen to them so many times where people ask for 15 minutes and they stay for 2 hours. So don't be that guy or that gal. Just don't do it, and be very clear what your intentions are. So again, if you make that statement and remind them of the two things, 15 minutes, 15, 20 minutes, and this is not about quoting your insurance at this point. The next is to introduce to them that what is that process that you want to invite them in. You know, the purpose of every meeting is to set the next meeting. So before you leave this meeting, you're going to want to get on your calendar, their calendar, the discovery meeting. But before you do that, you want to show them why you do have a different process. And so remember back to that comment about why people don't change. And for you to motivate, you want to show them that you do have a different way. You don't want to do that bait and switch approach where you do show up and all of a sudden out comes the applications, you're starting to fill out, you know, information. You're doing the same thing everybody else does, and that is not how this works. You definitely want them to see there is a different way. And so I'm going to show an example of what that toolbox looks like. And then again, you want to come with a story how this process works and how it worked for someone else. And then you want to show them the entire process map and what we're planning on taking them through. So here's that toolbox. Here's what it is. These are the things that we're going to take a customer through. We want them to know that there's many places that we can go to find financial levers that we could be pulling. We want them to, again, we want to talk about things nobody else is talking about in those first meetings. The problem is, and I would show this to the customer, say the problem is most brokers start here. They grab your policies, they grab your loss runs, and they run right to the marketplace without really doing their due diligence to understand what you're doing right, what you're doing wrong, and how to really tell your story right to get the most, to inspire that underwriter to put pen to paper and give you the best pricing. So that is not where we start. Besides that, that's only one financial lever that you can pull. And, you know, based on the relationship, it could be that you might get a 5%, change in that premium. But other than that, there's really not much more leverage you have. If they go through the process where we're going to start over here, we're going to go through some risk tolerance questions. We're going to ask some loss analytics, some exposure mitigations and non-insurance transfers. All of these, inside each one of these bubbles, there's several financial levers that we're going to try to vet out that's going to be unique just to that customer. So that's how we do it different. And it's done through a lot of questions, and it's called discovery is what we take them through. So the next meeting will be 60 to 90 minutes. Now, one thing I do want to express to you guys is this process can be expanded or contracted based on the size of the account. This really works best for customers who have they have lots of moving parts to their policy. If it's a small account and all they care about price, this is not the best approach. But hopefully, we're trying to help our producers to move upstream. You know, when you're feeding that main street, that's the area that you play. There's so much competition there. There's a lot of solutions there. Everybody's playing in that space, and there's really not a lot that you can offer to make a difference. So if you want to grow your book and you want to create long-term customers with more revenue on your books, this is the ideal process to take them through. So for us, when we look at a customer based on our resources that we bring in and add to this, to the solutions here, we look at accounts that are about 2,000 in revenue or above. So keep that in mind when you start looking at opportunities. If you want to fish in bigger ponds, this is the system that you want to use because of the questions that you're going to ask. However, you're going to see that a lot of the questions that we ask really are applicable to any size of account. So what is that process we're talking about? Remember I said there's a process map. This is what it is. And we also made that statement at the beginning, we're not here to quote your insurance or offer bid. Well, we're in phase one of our process here. We've had that 15-minute meeting. We want to take them into discovery, which is 90 minutes, 60 to 90 minutes. We will take our findings that we take from that meeting. We will create an assessment, or what we call a roadmap, that's going to be unique to them, of all of the solutions and all the concerns that we've identified. And we're going to present it back to them. It's going to take 60 to 90 minutes to present back to them. This is our findings. And if they like what they see, then they can hire us. And that's why we never take the application. We're not going to take any type of other forms with us to start gathering information to quote, because we haven't got them to that place yet. It's through the discovery is where you're going to start creating doubt for your customer, where they're going to look at this and go, maybe I don't have the right program in place. Maybe my broker hasn't. My broker's never taken me through that, asked me these questions before, or got me involved at this level on my own insurance program. You want to create that doubt that happens in the discovery based on the questions you're asking, without saying anything negative about your competition. That's not how we do business. We have a lot of integrity at the Leavitt Group, and we never disparage our competition. Is just not a good practice to get into. So there's a better way to do that without you having to say anything negative about their current situation. Besides that, when you start disparaging someone, basically you're calling them, they're kind of stupid. They're making those choices. We just don't want to create that type of environment for our customers. So from there, what does that discovery meeting look like? You know what? One of the most important things to do, and I'm sure every one of you have discovered this, if you don't have the right people in the room, if you're talking to the wrong person, you're not going to win the deal at the end of the day. You may have a relationship with someone that's on the leadership team, but they may not be the final decision maker. Maybe they're an influencer. So what we try to do is right out of the gate, how do you tee it up to get the right people in the room, at least for this part of the discussion? And so when you're setting that appointment for discovery, you ask, now how do you guys, what does your buying process look like, feel like? Who's all involved? Is it by committee? Is it, a couple people? Who are those people? Who are the influencers that need to be a part of this discussion? We would like to have them be a part of that discovery meeting. Now, if we can't get everybody in the room, can we at least get them there for the first 5 minutes? Or if not, can we give them this scorecard to have them complete on our behalf, so we understand how they look at their current program today? This would be very helpful for us as we start this whole roadmap and process, so we can make sure we're aligning all of your needs and we're bringing you guys all together to give you guys the right program. So that leads me next to this scorecard that we use. This scorecard is probably something you've never seen before. I've put on this demonstration day our light version, which only has 5 questions, so you can apply it to smaller accounts. But we do have the more complicated account, we have like 9 questions on our scorecard. But the beauty of a scorecard is you can put any question you want on here. And the purpose of the scorecard is, the first column over here on the left is worst case scenario, except for the first question. And on the right is best case scenario. So I want you to listen to a few of these questions. And you're going to see these are not underwriting questions. It's just about, these are questions to get them to think about, do I have the right program? So the first question on here is, we need to understand your risk appetite. Are you conservative? Do you like to self-insure as little as possible? Or do you guys have an aggressive approach to buying your insurance? Do you want to self-insure more? Again, there's no right or wrong answer, but as a producer, you need to know what they want. And really, again, there's no right or wrong answer here, but you just want them to circle the one that they've done, or that they've how they identify their current plan. And then once they do that, you want to ask them, okay, well, tell me about that. Why did you rate yourself that way? Get them to dig in and tell you why, what they're looking for. This is where you can start uncovering pain points. And this is areas where you can get them to really get the dialogue open and understand more about what they want and what they don't want. This is a really cool when you get all of the leadership team or the influencers rating that to see where do they fall, and how can we align the current program so it works for everybody. So the first question, if they say, well, we're a 2 right now, we're still new, we don't have a lot of cash flow, we need our insurance to really perform when it's time, so we want a program that's going to pay as if we need to use it. Good to know. So the thing you asked for at that point, well, one of the things we're going to do is we're going to take a copy of your policies. We'll need a copy of that, and we're going to see how your current policies align with your risk appetite. So it's just a different way of getting those policies from them. But we just want to make sure it's going to perform the way you're expecting it to. And then again, you start going through here. I'll go to C. Question, we don't have an effective post-claims handling procedure that directly ties to lowering premiums, or our procedure after a claim occurs are integral part of our cost containment strategy. What do they have in place today? And again, no right or wrong answer, but whatever they say, will tell me more. Let's say they say we have a 10. We really do this well. Again, you want to know why, because it's your job to tell their story to the underwriters in the best light possible to affect the premiums they're going to pay. And if you don't understand what they're doing, how can you communicate that to your underwriters? And it's a really good opportunity to take a court app and slide it across the desk before you can do this. Say, you know what, this is what underwriters see. This is what they see, along with some supplemental apps. Nowhere on here does it tell your story or what you're doing well to mitigate risk. So my job is to tell that story in your behalf. That's why I really need to understand what you're doing. So if they're doing it right, can you give me copies of your what you're doing? Can you show me examples that I can share with my underwriters to really help them believe that you've got this dialed in? And if they don't, that's okay. We want them to start thinking, and you have the ability at this point to educate why that's such an important thing for them to understand, and to help educate along the way. So again, this is a great way to take someone through discovery without breaking your promise to them. You want to really understand what they're doing right and what they're doing wrong. And the areas that they're doing wrong, it's your job to create some solutions to share with the carriers to let them know we're really good partners with them, and this is our plan of action as we move forward with this customer. So basically, the whole discovery process is this. You get them to score themselves. You want them to clarify why they scored themselves the way they did. You want to take the opportunity to educate them more on what you're talking about and why that's a question you're asking them. You want to probe deeper and really dig down and really understand and get them to think about, stew in those pain points, dig a little deeper. Is that a concern? You don't have a great claims handling process. With that question, well, what we'll need is a copy of your loss run so we can understand where your exposures are today, and how, if we need to tell a different story, a plan of action that we're going to present to you that will help you turn this around and again better represent yourself to those carriers that are determining how much you're going to pay. And then you ask for the documents you need to do that evaluation or that assessment in their behalf. So hopefully at the end of the conversation, this is what you walk away with. You get policies and you help them understand why you're asking that. You're getting loss runs, and you let them know, I'm not going to go to market at this time. That's not what I'm doing. So this is going to trigger an event with the carrier to talk to your broker that you're asking for loss runs. Just let them know you're doing an evaluation and you're not getting a quote at this time. So you don't have to worry about them going out and blocking markets. That could hurt you. The contractual agreements, this is great if you have like contractors or third-party vendors. This is important for those non-transfer exposures to see how are those worded today. Do they have any hold harmless clauses written in there? You know, where again, you think from, put your underwriter hat on, where is their exposure? What are they going to be on the hook for? If based on how this company is currently doing business and how their contracts read. Now, I just want to make sure I put in a disclaimer here. We do not make changes on contracts. We may point out a few things that may be lacking that we recommend they take it to their attorney and have an attorney look at it to protect them and mitigate that risk from those third-party relationships that they have. So don't misunderstand about really your role in this space, but this is a great financial lever that you should be identifying and looking at if they are doing business with contract on contracts. Then the last thing is we want to get their NCCI or WCIRB worksheet, because we really want to look at their mods if you're looking at the work comp part of this. Even if you're not looking at work comp, great. This is great to know up front, because you can stage yourself for being able to move into that line of business down the road. So I want Joe to explain to you guys a little bit why this scorecard is a game changer.
So when I sell to folks, I take in, you know, my roadmap kit with me, and part of that is the discovery scorecard. What I like about that is it helps me dive in to a deeper line of questioning. So I'm not just asking, hey, what are your payrolls? What are your sales? Things that are so superficial. What the scorecard allows me to do is it allows me to kind of prod for areas where I don't initially see any areas of concern or red flags that the insured might have. But as I use the scorecard and as the dialogue kind of begins, it's a great way for me to ask additional follow-up questions, or to kind of help them realize that as we're scoring them, there's some things that can be improved upon, and not everything's perfect. And what I found so far in my with my career is that everybody thinks they have the best agent, everybody thinks they have the best program, and so they're not used to being asked these questions, and taking them a step further has been really beneficial for them, and it helps me put together a plan of action for them that it's a win-win for both sides. So when I
Okay, so that's why the scorecard, it's different. You're going to do it different. You want to give them a different buying experience. That's the goal. So what happens once you build out? You take all the information away. You come back with your solutions. Well, number one, and I tell this to produce all the time, you know what, if you show up and start talking about you and your agency and how great you are, and you have a national, you're all over the United States, you can really meet their needs. People don't care about you at this, yet early on the game so don't make it about you. You want to make sure that they know this is all about them. It's all about understanding how they do business. It's understanding how, if there's a fit for this process for the both of you to take them through, we want to take the light off ourselves and put it on them. However, when we bring that presentation back or our roadmap back to them, this is now where we get to shine. This is where we show our value proposition, and we want to make it relevant to their situation. It's really important it's a dialogue where it's a conversation, not a presentation that you're doing with them. You want to get them to be open and honest with you, and that roadmap is going to tell a story about your prospect. Remember, we're going to create case studies on them. We're going to tell their story, and we want to be able to put them in the best light possible with the right outcomes that's going to really serve them best over time. And so we want them to know that with us, we take our own customers through this process every 2 to 3 years, because we know it takes about 2 to 3 years to really see the change that many businesses are going through. This is just part of doing business with us and how we do it. So what does that look like? There's one more video here I want to share about how do you communicate your findings back to the customer.
So when I go through a prospective insured's policy or policies, what we try to do is kind of identify some areas of concern or red flags. And the reason for this is just to essentially educate them of potential pitfalls or holes within their policy. and then from there put it into a presentation to where they can see what this business, essentially what the impact or the business impact would be on them and on bottom dollar. So it's not to say that, hey, you're an idiot for buying insurance this way. It's not to it's not to tell them that what they've been doing is not it's not a good idea, but it's essentially a way to throw their current agent or throw their current broker under the bus without saying that, I guess is a good way of putting that. And so the red flags are really, it's a really good way for them to identify some areas that need to be improved upon. So
okay, so what does that red flag process look like? And this is an actual example of what Joe on a client that he did. When you pick red flags, you don't want to pick a gazillion of them. You want to pick some really powerful ones for this presentation, because this is just the beginning of showing them this is what we do in our process. And if they hire us and they want to move forward with us, there'll be more questions, there'll be applications, but we'll dig a lot deeper and make sure we fill the rest of the gaps and we do even a deeper dive. But until then, we want to just give them a taste of what buying different, doing it different looks like. And so what we recommend, 5 to 8 strong red flags are better than 15, 20, all these little ticky things, because you don't want to take away from that impact of what you're sharing with them. So this actual example is Joe wrote assisted living center that had like 8 locations, Utah and in Nevada. And one of the things that he discovered, so a red flag is going to be the problem that he discovered. The business outcome is that what this means to you is, Mr. Customer, and then here's our recommendations on how to solve that problem. So the first thing on here, and I'm not going to go through the whole thing, but I just want you to understand how you take a customer through this process. The first one is the named insureds do not match in all the policies. So remember, they've got 8 different locations across the southern region here. And so what does that mean to them? Well, in the event of a claim or a suit can be brought against all entities, and if not properly listed, there will be no coverage. That's a problem. But here's how we would fix that. We would have your broker line all policies in the named insureds and entities to avoid these potential coverage gaps. And then you pause and you let them, so tell me how you feel about that. Is that a concern to you? Is that, and get them to talk about each one of these red flags and how this is going to help. Were you aware, that everybody's on the hook if there's a lawsuit? Is that a problem for you? And again, just spend a little time in there, letting them stew a little bit and talking through. So again, that's where that doubt comes in. Where Joe said, I'm not throwing that other guy under the bus, but I want them to see the deficiencies and where they are right now. However, there is a solution here that can be fixed. Now, one of the things that we do, obviously, we will create this for you and it's yours to keep. Even if you, don't hire us, this is yours. Well, how can we make that bold statement and not trust that they won't just hand all of our hard work over to their current broker? Well, there's 2 things. In the beginning, when we say we're going to, through this process, one of the things we're going to ask you is we're going to do a lot of work in your behalf. We're going to give you an outcome that you've probably never had before. We're going to make some recommendations to really align this to how you guys want it to perform. But what we ask of you is you do not share this with your current broker. This is our work and we've done this for you. So, it's that kind of handshake thing, but that is one way to do it. The other thing is you can build in solutions that only you offer. One of the things we offer here at the Leavitt Group is we have a state-of-the-art risk management system that we utilize. And so some of our solutions are going to be tied to that risk management resource that we have that only we can offer. So there's ways to do this right. But this is really important to get them to think about, create that doubt and do it this way. So then you take all of the findings, put it on this document. You put them in which of those spheres that it came from our earlier questions. And then you start, this is where the soft sell starts to come in. Now to fix these, before we do this, the question I would ask, okay, of the things that we talked about today, Mr. Customer, which one really jumped out at you that concerned you? So maybe they said, yeah, this skilled living, sexual, physical abuse and misconduct exclusion, had no idea. My nursing staff, my CNA, there was no coverage if there's a problem that occurred under their watch. And we don't have no coverage for that. We had no idea. Maybe that's an area that we're really like, holy cow, we did not know. So you're right. That is a big one. And for the very reasons you just said, you may add a little more, dig a little deeper, add a little more pain there. But with that, this other one really concerned me. So again, just kind of go back and express in this other one. This is a big one. If you have this misconduct and abuse thing happening here, well, everybody's on the hook. Deep pockets is where it's going to go. These are some really major ones that I see that you probably need to get on right away and fix that. So to fix these, who in your company would we need to work with to make that happen? And what is your priority of how you want, when and you want these things, which ones you want to get started on right away? And when would you like these completed? Again, now you're starting that soft sell to get hired. So from there, you want to tell them, okay, so there's a couple ways we can do this. You can make us your broker, sign over this broker of record, and we can get busy on this right now. We can get to work. We'll start correcting these problems. I know it's in the middle of, your renewal year, which is great because it's time to really fix things and get you prepared for when you go to market at renewal. Then we'll fill out the applications, but we want to help prepare to get you in the best shape possible, get some great plans in place. So now we can present you in the best light possible to the carriers that we feel will serve you the best with the relationships that we have. Or you can pay us a fee, and you can hire us as a consultant, and you can keep your current broker. And usually that fee we recommend is whatever that commission dollars would be on that policy. So let's say there was a $15,000 commission that was paid on their current policies. That's what your fee would be. So again, pretty bold. This is so effective because people will look at this going like, so why would I keep my broker who didn't do it right, who left me completely exposed, and then pay you equally amount? How about we just sign this broker of record and you get to work for us right now? So you guys, this is a very effective way to do business. It's so different. It really puts you in a position of advising and not just keeping it about price, because there's so many ways that price can be affected. And when people tell you, oh, I care about price, you can say, we care about price too. And we have found if you step into our process, we can identify so many more financial levers that you could be or should be pulling that will really impact your overall price. So if you're interested in learning more, just step into our process. So that's what it's all about. I'm going to close with just a final video here from Joe explaining why this is so effective for him.
I would say the best thing for me with the roadmap, or the best thing that I've learned and that kind of set me apart, or sets us apart as we use this with our clients, apart from the competition, is just the way that we get people to feel comfortable. When I was initially starting in insurance, it was more of just quote it, just kind of come in as a salesman and just kind of push and have that used car salesman approach. What I like about Roadmap is it's not that way at all. I mean, you can be a little bit more aggressive, but the approach that I've taken that I've seen has been beneficial for me has been to essentially ease off the gas pedal a little bit, or to not try to force my agenda upon them. And by doing that, I've seen, many times over how it has lowered buyers' resistance. I see that the wall is coming down on their side of the table, and it just gets them more open and talking. And at the end of the day, that's what we want. I'm not here to tell you that it's going to work for everybody, but for the people that it is a fit for, it's fantastic, and you're going to build long-term relationships, and these clients will never want to leave.
Okay, well, last thing on this is just a little bit about Joe. Joe's been with us for 4 years, And he is now almost $1 million revenue producer because the last 3 years, he has used this process to really win business. His book, he's closing about 85% of the people he's talking to. And the key is you've got to find out in the beginning, are they a good fit? Do they want this process? If it's not about price, they care about their insurance. People really love this process. So with that,
I would say the best.
Sorry, I'm going to turn it back to you, Heather, for questions or back to you.
Great, thanks, Peggy. So that concludes our third webinar of the series. Just to point out, we do have 3 more coming up. We have perpetuation strategy on September 20th, building relationships with insurance carriers on September 30th, and then our agency valuation on October 4th. Recordings of the previous webinars, including this one, will also be live today on our events page through the affiliation section of the Leavitt Group website. And then finally, if you would just flip to the last slide, just some contact information. If you have any questions, up here on the screen, take a snapshot of it with your phone. And that is all we have for today. So I don't see any questions in the chat, Peggy. So I think we can end today's session. So thanks everyone for attending, and hope to see you at some of our future sessions coming up.
Thank you.
Okay.
We'll see ya.
Okay. Thanks everyone. Have a great day.